What's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took today inside the Discord, as well as the game plan going into tomorrow. And let me tell you, today was a beautiful day. If you guys watched the video from yesterday, I gave you guys the game plan on what to look for, and if you executed that to a T, you would have been paid today. I gave you guys the blueprint, and exactly what I said yesterday pretty much ended up happening. Obviously, we have a game plan for two sides of the market, and we got the bearish side today. So pretty much what I looked at today off of open. So we have the 635 puts. That's what we ended up getting today. It's Monday, or technically it's Tuesday, but new day of the week. We pick the new contracts, and the 635s were the ones that we got based on the open. And obviously market was closed yesterday, so there was no opening price on SPY. When we opened, we got this massive gap down. We broke above this 50 SMA. I told you guys yesterday it'll be very key to watch to see if we could flip bearish, which pretty much means 10 SMA cross above the 50 on the put side. This is how we gauge the trend in the market. So if the puts cross on the 30-minute with the 50 trending up, that means the market's bearish. So that's what ended up happening today. And when we go down into the 0DT chart, this is where we got our entry. So this is kind of how you read this chart off of open. So right off open, we have this massive gap up on these contracts because we gap down because these are puts. So with this massive candle here, you're not chasing this. Even though this 10's crossing the 50, this is one of those instances where you don't take this trade. It's common sense. We get a massive gap down or gap up on these contracts. SMAs are literally miles away from our prices. So more times than not, this is going to end up pulling back quite a bit before it ends up running. So all you had to do was wait either for this dip to the 50 or the reclaim of the 10. Very simple. The reason I did not play this 50 dip was at the time, if we look at the contracts, all right, I'm going to pull it up. I have the screenshot of in the morning of what this actually looked like, and I just didn't love the look of the 30-minute at the time of the pullback. So if we look here, I'm trying to find the screenshot in the Discord, but yeah, here it is at, what time is this? 10:36, all right? So this is what it looked like at 10:36. If we look here, this is what it looked like. So you could see 10 SMAs crossing the 50, but at the same time, there's a big gap between price and the SMAs. Contracts are at like 250. The 10's at like less than like 170. 50's at like 130, 140. So there's a chance it could have pulled back before it ended up going. And this is why I was waiting for a closure above the 10 SMA first before I took an entry, because a lot of the times when we get these massive drops overnight, they tend to end up pulling back to the 50 and then getting the bounce, or just completely losing the 50 and going negative. So I wanted the extra confirmation for this trade just because of how that chart ended up looking. So I mean, if you bought the 50 dip, you would have been paid anyways. But again, another thing was this 10 SMA was pointed down so aggressively. And once we ended up reclaiming this 10 SMA, I mean this was an A+ setup. It was very simple. So we pulled back to this 50 SMA. You either buy right here, because you guys know in a trending market, like I said, when that 30-minute chart is crossed, that means we're trending. So we're trending on the puts. If we get that cross, you could buy these 50 dips. So you either buy this 50 dip or wait for the confirmation and get a closure above the 10. I waited for this closure above the 10. I shorted on that candle closure 1045, and there was literally zero drawdown on this trade. It immediately went in my favor. 120 points on NQ. There was no reason to sell. I mean, you guys could see when we're in a trending market, after we get back with the 10, you just use the 10 SMA as your trailing stop. We did not lose the 10 until 12:15. I ended up selling on this candle right here at 11:35 on this final push right here. This is the candle I ended up selling it all at, and that's where I was up 120 points. Contracts only went another like 20% from there, so not even 20%. I mean, probably around 20%, but I mean that's a pretty good selling point. I mean, contracts only went another 20%, like I said, and then by the time we lost the 10, contracts were at like 180. So that was a solid spot to sell at. I mean, that's all you need for the day. Like when I catch a move this big, I'm not going to be taking this 50 dip down here. I'm just not. Like, you don't need to take every trade the system gives. I was talking about this in the Discord today, a little bit ago, but you don't need to take every trade the system gives. If you catch a trade like this, you don't need to continue to trade. I mean, 120 points in a trade. Why would you be placing another trade for the day? That's a really good trade. Why risk that for the day? Just move on the next day. Look for a really good setup. If it doesn't come, move on to the next day. Things like that. So yeah, I mean, the high probability trades are the ones you want to be looking for. I mean, even though this 50 dips a good trade, it's not the most, I'd say, probable trade because I know, yes, the market trending, you buy these dips, but this is on the initial 30-minute cross. Like I said in the screenshot, on this initial screenshot, the 30-minute chart was just crossing. So, with us just crossing, pretty much if we got back above that 10 SMA, like I said, that confirms we are going to get the move lower. And with that closure above the 10, we ended up just nuking. And the move was so drastic, like I said, the 30-minute cross just happened. So the trend just flipped. And when that happens, that's when you expect a really big move. And, after we got a really big move down, it doesn't mean that, for certain that we're going to hold this 50 SMA. Yes, we're in a trend, but it doesn't mean we're going to hold this 50. I'd say like this trade is way more, probable than the 50 dip. That's just how I look at it, because when we get that initial trend flip, we're expecting a big move, and then anything else from there is extra. So, are we going to hold the 50? I don't know. Like the chances are in our favor, but at the same time, we got a very drastic move from this cross already. So, is it going to hold? I don't know, but these are the trades you want to be taking. I always say this when we're trading with a 30-minute chart. That's the best concept or best probable trade, or the probability on the trade when we're just crossing on the 30-minute, either positive or negative. So honestly, if you we're looking for A+ setups, the criteria would just be that 30-minute initially crossing like today, or crossing negative initially. Like that 50 SMA gets lost at 10 o'clock in the morning, and the puts are crossing. Let's say the calls are going negative on the 30-minute, the 0DT puts are crossing. That's an A+ setup because we have that 30-minute chart aligning with the 0DT chart. So with that chart going negative plus the 0DT cross happening, those are two really strong confluences, and that's where your really good trades are coming from. Even though the 30-minute, yes, it's in our time frame, or it's in our bias, but at the same time, the trend's going to get lost at some point, and we're going to get a strong bounce at some point. So when I look at trades, I say this trade is 100 times better than just buying the 50 dip. That's just how I look at it. It's still a good opportunity, low risk, because if you buy the 50, close under, okay, you're out for you probably lost 30 points in this trade. And if we did hold this 50 and trend higher, your risk to reward on the trade's really good. That's why these 50 dips are a good way to trade. But for me, the initial cross on the 30-minute tied with the 0DT chart, whether it's a 50 dip, reclaim of the 10, or just initially crossing, those are the A++ setups you want to be looking for. If you only had a limited amount of trades to take every month, those were the ones that I'd be looking for. If you had 5 trades for the month, you want to be trading when the 30-minute is just crossing positive or just crossing negative. Pair that with the 0DT chart just crossing, or it's a 50 dip if it's in trend, if we're flipping the trend like today, or you get the 10 SMA reclaim while we're either just crossing like today or the chart's going negative. So those are the trades that you want to be looking for, and the ones that I feel are really, really confident. And this trade today, I was super confident. Everything was aligning. I mean, once we got this closure by the 10 SMA, it was free game. It was, I told you guys the dump's going to be coming. I mean, it looked really good. So, yeah, that's kind of a ramble on the system a bit, but that's kind of what you want to be looking for. I'm not, too keen on taking this trade because I don't really care about it, because we already caught this big move here. I really don't care what happens the rest of the day, and that's pretty much how you should approach it. I mean, you really only need a few really good trades a month, especially if you're trading on funded accounts. If you're trading on Top Step, My Fund of Futures, you could have 10 accounts right there, plus Apex, another 5-10 accounts that you could run. Obviously, you get up to 20 on Apex, but still, you have these different firms. All you really need is a few really good trades a month, and you could be making a lot. So that's kind of how we played SPY today. Very simple. 30-minute crossed. I was only looking for shorts. No reason for me to look at longs, even though we did end up ripping today. That's just not how the system works. But like I said, this monthly chart is pretty important as well. I mean, if we flip to this chart here, September 19th contracts, the monthly contracts, I told you guys next couple days are pretty important, because if this chart goes negative, 10 SMA crosses below the 50 turns down, we're going to see a significant move lower. I mean, that's just how it is. This chart goes negative, it's the same thing as a 30-minute chart going negative. We're going to see a move in the opposite direction of the premium. This time frame is pretty significant. You can see how strong that 50's been, and even though we closed below it, once we got back above it, we end up ripping a little higher. And yeah, if we do lose this trend here on the monthlies, I would expect a pretty significant drop. We will have some resistance overhead, which will be interesting to see because if we look on the monthlies here, the 35s, daily time frame. I mean, like I said, I went over this yesterday. These contracts, obviously, these are different ones, but same thing really applies. I mean, from the close, I told you guys we could end up pumping all the way up into that 50, and then from there, it'll be a waiting game to see what actually happens. Because if this daily chart ends up crossing, obviously, we're expected to get a move lower. But for now, until this 50 breaks, this would be the spot where I'd expect to bounce from. I mean, these contracts are still at like what, $13.90 a piece. Contracts right now are like what, $5 to $6 a piece. So there's still for some room lower if that 30-minute trend continues and holds up. But yeah, the 50 SMA obviously would be the spot to really de-risk on the short side if you were short. But obviously, I'm not like swinging anything. It's kind of just to check the chart to see what we actually look like going forward. But I mean, going into tomorrow, if we look at the 30-minute right now, market's still bearish. You can see 10s above the 50. This 50 SMA is going to be the key support to watch for. Again, since we're bearish, only focused on the longs, the shorts, until that 50 breaks and crosses negative. If this chart goes negative, I'm 100% open to taking longs. I mean, if we lose the 50, 10 cross below the 50, and we get a 0 DT call cross, that's an A+ setup, like I just went over. It's because you have that 30-minute chart aligned with the 0-day chart. 30-minute chart going negative on the put side, okay, we get a call cross, okay, that's a really good setup to take. It's the same thing we did today, just pretty much reverse. Again, if we stay bearish, look for a put cross, and that's all you need. We get if we get a put cross tomorrow, I expect a pretty fat move out of it. If we get a call cross and this chart goes negative, I'd expect a fat move from it. So, set up either way tomorrow. It's very simple. If you guys want to, see how we trade throughout the day, join the Discord down below. It's where I posted the trade today. 120 points from my entry, literally no drawdown on it whatsoever. Maybe like 2 points, 3 points if you got, a bad fill. But yeah, that's what we did today. Hope you guys learned something. Join the course if you want to learn. I'm out. Peace.